Hi, I'm Tracy, your local ag risk advisor. I've been working with ag producers for several years, helping them manage risk. Here in Colorado, growers know that winter and summer extreme weather events can make or break a business. For wholesale nurseries, there's only been one tool to protect revenue, which was the wholesale nursery crop insurance program. Until now, I'm excited to introduce to you a new pilot program called Nursery Value Select. For years, the Risk Management Agency has been evaluating the wholesale nursery program. They've been seeking input from growers that would increase the overall participation. Nursery Value Select is a compilation of the best ideas. The changes will simplify the process and customize the coverage for each operation. In this short video, I'll introduce the program, set up a policy, and explain claim procedures. But before I do, please note that the program needs to be available in your area to take advantage of it. Pilot programs roll out incrementally over several years, and I'll have a comprehensive list of availabilities for the 2021 crop year at the end of this video. And number two, your operation must qualify as a wholesale nursery. That means 40% of plant sales need to be from wholesale sales. If you are currently enrolled in the wholesale nursery crop insurance program and plan to transition to the Nursery Value Select program this fall of 2020 for the 2021 crop year, I suggest first watching my video called 5 Major Changes with Nursery Value Select. That short video just highlights the major differences you're going to see with the Nursery Value Select program. The insurance period for Nursery Value Select is from October 1 to September 30th. The new sales closing date or sign-up deadline is September 1st. The documents that need to be submitted on September 1st are these 4 documents. Number 1, an application for the first year only. Number 2, a catalog. Number 3, a monthly unit value report. And number 4, a nursery value report. Let's go into a little bit more detail about these 4 documents. Number 1, the application. The application is needed really for the first year only to ensure that your entity is in good standing and qualifies for USDA subsidies. In addition to the first year, all growers must have an on-site inspection during the underwriting process. Number 2, a catalog. A digital or hard copy catalog is acceptable. It must have current year pricing and plant types listed in it. And number 3, the monthly unit value report. Essentially, with the wholesale nursery crop insurance program, the RMA asked the grower to prove inventory values and records before coverage could take place. With Nursery Value Select, the RMA asks the grower to prove up inventory values after coverage takes place, or more specifically, when a claim is filed. So it really shifts the heavy lifting to only the years when a claim is filed, rather than every single year. And lastly, the Nursery Value Report, which will contain all of your selected values and your total amount of insurance. Here's a snapshot of the monthly unit value report. You'll have a separate report for container grown and field grown. There are 10 plant types reduced from 16, and each plant type will be entered into the category column. You will estimate approximate monthly inventory totals based on your historical records. To the right will indicate the highest monthly total, and then to the far right, you will enter your selected value, or SV. The selected value is a dollar amount you choose to insure that plant type for. For example, on deciduous trees, you see that this ranges up to $150,000 in some months, and this particular producer has chosen to insure the highest level of $150,000. You'll then multiply the selected value by the coverage level, and the amount of insurance for deciduous trees here is $112,500. The premium rates for the nursery program have not changed. The subsidy levels range from 55 to 67%, so even at the highest coverage level, the producer will only pay 45% of the total premium. So I know what you're thinking. What if I have a claim during a month with an actual inventory value of let's say $70,000, and my selected value is $150,000. Am I going to have an over-reporting penalty? No. At the time of the claim, the first thing the adjuster will do is to determine the pre-loss inventory value, which will come from sales receipts. Then he will determine a post-loss inventory value. Let's use this producer as an example. To keep things simple, let's say that his estimated monthly value of $70,000 was verified by sales receipts, and that was the determined pre-loss value. Let's say his post-loss value totals $50,000, so that is a 29% loss. To determine the amount of loss in dollars, we'll multiply the loss percentage by either the pre-loss value or the selected value, whichever is lower. In this case, the pre-value is lower at $70,000, so the amount of loss equals $20,300. The deductible will have to be met before a payment can be issued. This is a perfect segue to the occurrence loss option, a new endorsement available with NVS. The occurrence loss option says if I have a loss greater than 10% in any plant type, I'll get paid an indemnity. This is available, of course, with a small additional premium, but it would allow you to get indemnity payments much sooner if that minimum threshold of 10% is met. We've gone through a lot of information here, but I sure hope you understand a little better how the Nursery Value Select program works. Our team would love to hear from you to sift through this information. We're easy to reach via phone or email. Our information is on our website, agriskadvisors.com, and while you're there, sign up for our weekly Wednesday weather blast if you're not receiving that. It's produced by Don Day, meteorologist out of Cheyenne, Wyoming, for the benefit of all of our ag producers. I sure hope you get some benefit out of that information. That's a wrap for me today. I'm Tracy, your local ag risk advisor, with you no matter the weather.